behalf of IIDVL National and IIDVL GSB also, I request all the members of IIDVL to become the DVL Welfare Trust. Few of the important questions related to DVL Welfare Trust will be taking in the question and answer session at the end of the session. Thank you. Now, the next topic is recent vexed issue in income tax and importance of record keeping, and will be done by one of the eminent income tax consultant, Mr. Dakshish Kothari. I invite Dakshish Bhai to be on the dais to introduce Mr. Dakshish Kothari. He is MD and CEO of Ashutosh Financial Service Private Limited. He is editor of monthly newsletter Dhan Vyavastha, published by the company itself, and it has got wide circulation. As director of various industrial companies, trustee to various charitable trusts, is involved in various projects of Rotary Club. He is a Paul Harris Fellow of Royal Rotary International. He has got vast experience in the field of income tax, and he will be highlighting the income tax issues for us. Thank you very much.
A warm good morning to everybody on this cool Sunday morning. Chairman of the session, moderator of the session, my esteemed co-speakers. My session is in two parts. The first one being recent vexed issues and thereafter maintenance of records. Mind the words recent and vexed issues. So we'll be touching some issues which have gained a lot of discussion, and especially during amongst the medical fraternity and also in the WhatsApp world. So we'll be taking those vexed issues first, and thereafter, as I said, the maintenance of records part. The first and foremost issue which has been a hot topic of discussion since last 2 years, from the time this section has come into being, is the section 44 ADA. There is a widespread belief that now there is a great concession which has been allowed to the doctors, and what you can do is that the moment your total gross receipts is below 50 lakhs, you need to just show a taxable income to the extent of 50%, and everything is over. You need not even keep your books of accounts. But actually the provision is something different. The provision is that when your gross total receipts is below 50 lakhs, you need to show at least an income of 50% and not only 50%. If your income exceeds 50%, you are supposed to return that income which is more than 50%. So, in fact, 50% is the minimum income that you need to disclose. If in case, if you opt that no, my income is very much below 50% and this is what is the fact, then I need to get my accounts audited, and if I submit those accounts audited, then I am compliant, and my returned income, which is less than 50% of the gross receipts, has also to be accepted by the income tax department. So this is a measure to collect taxes in an ad hoc manner. So what they want to do is that if somebody is not so very particular in maintaining his books of accounts, and if he is not returning an income which is more than 50%, then let us collect taxes by way of an ad hoc measure. So, in my view, this is not a concession. This is something which is it is in the interest of the department. Now, I will just try to give details as to what could be the hazards of going into 44 ADA. So many of the doctors, as I said and I repeat, have thought that this is a simplistic solution to my tax issues. As I said, I need not maintain books of accounts and I can just file a return, 50%, the matter is over. But no, As I said, it is in the interest of the department, and what would happen is that if my gross total income is say 30 lakhs of rupees, out of which I disclose 15 lakhs, and over a period of 5 years, 10 years, my accumulated income which I have disclosed is less than the capital accretion that I have made across this period, then that income can be treated as an unexplained income. So if we are thinking that we'll disclose this income and the matter ends, then this is not a way out. Then this can derail my process of maintaining books of accounts and asset creation. Always there are two angles to when you pay taxes. The income tax department would feel that my collection of revenue is done in whatever manner. As far as the SSE is concerned, his focus has to be on the fact that when I am paying my taxes, my asset creation in my books of accounts should be in a perfect manner, that over a period of time or at a certain point of time, if somebody asks me that how did you procure this asset, I need to have a definite answer, and I need to have all my assets as a part of my balance sheet. Then the next provision which has been recently introduced, and so many of the people in business and profession are not very much aware of, is that any expenses in excess of 10,000 rupees would not be allowed as a deduction if it is paid in cash. So any expenses that we incur has to be paid by an account pay check if it is in excess of 10,000 rupees. Further on, in the last budget, what has also been provided that if you are making any capital expenditure, even that capital expenditure in excess of 10,000 rupees have to be paid by an account pay check. Otherwise, it will not be considered as an actual cost of acquisition. Now, the ramification of it would be that when it is not considered as an actual cost in your books of accounts, or rather for income tax purposes, you cannot claim any depreciation on it, and when you sell that asset, the entire sale proceeds could be treated as an income. So if I am buying a scooter worth 40,000 rupees, and if I say that I paid cash out of it, I will not be allowed any depreciation on that scooter, and when I sell that scooter for 15,000 rupees 5 years down the line, then that 15,000 rupees will be my income straight away because my cost is zero. Then in respect of purchase of any immovable property, there we have seen in our practice that there are so many people who carry out transaction by payment of cash, which is shown as a consideration in the document. You cannot pay cash in excess of 20,000 rupees while buying any immovable property. Then this is a very recently introduced section, and there was a lot of information which was there on WhatsApp, but here I would like to make it clear that any payment received by anybody in excess of 2 lakhs of rupees from a person in a day. So if I am receiving any money from a person for sale of anything, for providing any service in excess of 2 lakhs rupees per day, there is a strict penalty equivalent to the amount which is received. Then in respect of a single transaction, so if I am admitted in a hospital and my hospital bill is 3 lakhs of rupees, then it is a single transaction and I cannot pay my hospital bills by cash. I have to pay it by banking channels or by an account pay check. And if I am thinking that I will pay 1.5 lakhs of rupees in a staggered manner, no, this is something which pertains to one event or occasion. So I will not be able to pay anything by cash in respect of that event or occasion. Another concession which has been allowed in order to encourage people that people go more for the compliance side on the real estate transactions is that in respect of calculation of capital gains, the base year has been shifted from 1981 to 2001. I will explain you the implication of it. Say I was holding a immovable property which I had bought in the year 1976, or I was inherited a property which was acquired in 1976. The provision earlier said that my cost of acquisition in 1976, which would be deductible against my sale consideration, would be substituted by my valuation of that property as on 1/4/1981. That was what was the provision which stood earlier. That value as on 1/4/1981 would then be subjected to indexation, and that would be allowed as a deduction from the sale consideration which I am getting at this point of time. Now what has been changed is that base year of 1981 has been shifted to 2001. So it is very clear that I will get a larger deduction. My property in 1976 valued in 1981 would be a certain value, and if it is valued in 2001 and I am going to get a deduction to the extent of the value as on 2001, I will stand to gain much more, and I will be subjected to taxation only on the value as on date minus the value in 2001 and indexed thereafter. So this is a means by which the government wants to encourage that people transact in a manner where it is a transparent manner of transacting on capital gains. Then in respect of immovable property, in order to qualify a property for long-term capital gains, earlier the period was 36 months. Now it has been scaled down to 24 months. So if you hold a property just for a period of 24 months, it would qualify for long-term capital gains. It will be subjected to indexation. You can avail different deductions in terms of 54EC, where you can make the investments into capital gain bonds, and thereafter, if there is some profit, it can be taxed at the concessional rate of 20%. Then from this year, it is the year ended 31/3/2018, for which we would be supposed to file the return either on 31st July or October, in September, if you are supposed to get your accounts audited. If there is any delay in filing of that return, whatever be the reason of delay, there is a mandatory, they have not used the word penalty, it is a fee. So unless we don't pay those fees, the return would not be uploaded. And thereafter till 31st March, so if we cross 31st December, then the penalty or the fee is 10,000 rupees, and if the income is below 5 lakhs of rupees, it is scaled to just 1,000 rupees. But now there is a consequence, not just by paying interest under section 234A, B and C, but also a consequence of paying a fee for filing delayed return. There has been an amendment in section 68 of the Act. Not exactly an amendment in the section 68 of the Act, but the ramifications of it. I will just try to give a little detail of it. Earlier, what was the provision? Section 68 is something like this. Any sum of fund which is credited in our books of account, and if we are unable to explain the nature and source of that credit, or the explanation offered by the SSE is, in the opinion of the assessing officer, not satisfactory, then that income is taxed under section 68. So I received a gift from somebody. He is Mr. ABC. I was not able to explain the nature and source in a satisfactory manner to the assessing officer. That was a gift credited in my books of accounts. So the assessing officer would say that I will not accept this. I will treat it as a taxable income under section 68. I will go into detail why I am laying this stress on section 68. I am first illustrating what could be the kinds of incomes or how section 68 will come into play. The first illustration, I receive a gift and I don't offer a satisfactory explanation. 2, I receive some credit, a loan from Mr. ABC, and I am not able to satisfactorily prove to the assessing officer that this is something which is in the nature of a loan. Then the assessing officer can treat it as a taxable income. Reason why after the demonetization, the government made a little amendment in the way the incomes under section 68 would be taxed. After demonetization, we heard from so many people that I have got this much amount of cash, and that cash, what I will do is that rather than going for all those schemes which were rolled out by the Prime Minister, which were in the taxation range of 60% and above, what I will do is that I will show it is as my current year's income. I will show that I had a larger receipt from my profession, and I will return it and I will pay 30% tax. What's the problem? So this section 68 will come into play. It will say that you need to substantiate the nature and source of that income. So if I am not able to substantiate the nature and source of that additional income, which is a one-off income which I am disclosing, then I will be subjected to a taxation of 77.25%. So any income which comes under taxation under section 68 is subjected to taxation at the rate of 77.25%. So all the amounts, may it be income, may it be a loan or a gift, if the moment the assessing officer taxes it under section 68, then we will be into that high tax paying situation. Now, how to deal with section 68? There are 3 pillars for which we always need to keep in mind that any amount which is credited in our books of accounts, we need to ensure that we are able to prove the identity of the person who is giving that credit. Then we are supposed to prove the credit worthiness of the person who is giving that credit. And the third one is that we need to substantiate that the transaction is genuine, right? So if I receive a gift from Mr. ABC and if I am not able to prove his identity, right, I cannot conclusively put before the assessing officer that this is the identity of the person who has gifted the money, then I will be in a problem. 2, if I am not able to substantiate the credit worthiness of that person, say I received a gift worth 5 lakhs of rupees from a person who is my employee working for 10,000 rupees in my company, then his credit worthiness is not established. Then the third pillar which we need to prove in order to escape the provisions of section 68 is the genuineness of transaction. The genuineness of transaction comes from the different circumstances which are in and around that transaction. So when you receive an income which is much more in excess of the trend of all the different years, and if you return that income even if we pay 30% tax, the assessing officer would say that this transaction's genuinity is not in place and I might tax it under section 6. The second part is the maintenance of records. This is the statutory requirement for all the doctors that under section 44AA, read with rule 6F, all the records are supposed to be maintained. Then why maintenance of records is important for the personal reasons. I need to know what I earn, what I spend, what are my expenses, what are my incomes. And at times we receive, so many times we receive, that this is something which is guaranteed for 10 years. But if I have not maintained my records properly, then I will not be able to claim that guarantee warranty. Then show my financial capacity. If I want to get a credit card, a loan, a foreign travel, I need to have proper records in order to substantiate that I am a person of means. Then the most important part in these modern times, I can use this maintenance of records as a means of management information system. I can manage my practice and profession in the manner that I can make a different evaluation as to how my practice is performing in respect of what treatment I should concentrate, what timings, and those things. Then, if my assets and liabilities are properly recorded, then transferring over to my legal heirs could be something which could be seamless. Then I need to not maintain recorded evidences which could lead to a conclusive evidence or a circumstantial evidence in case of search and seizure. Then, if the assets are properly disclosed, then I will be not in a problem as far as search and seizure operations are concerned. The last slide, and which I would like to state, that what is the homework? The homework is that I should see that all my assets, financial assets, are exactly as per my balance sheet. My gold ornaments and jewelry are as per the valuation report. My immovable property is properly recorded, and my loans also properly recorded. The message now, especially in the types of winds which are blowing, and after the Gujarat elections, these elections, the government will have a little more strength in rolling out so many measures.